Hi everyone, this is Sean Clancy with Provision Financial, and today we thought it would be appropriate to put out a video specifically concerning the coronavirus. Obviously, I'm sure all of us have heard the news about the coronavirus and it's spreading really throughout the world, but more recently, specifically in the US. And obviously, that ties into what we've seen in the market the last week. Now, as I'm recording this, it's Friday, the February 28th, and for the last 5 days, it has really been a downward trend in the markets, and that has really, had clients give us calls and ask us our opinions about what's going on, and we encourage you to do that, to speak with your advisor, because obviously, your accounts are important, and it's, very important to be in the know about those accounts. So what we wanted to do today is to look at two charts that we think do a great job of really putting the market and the coronavirus in context. Now, please note that we're not trying to downplay the situation. We know that lives are being affected all over the world, and the last thing we want to do is downplay that. So please don't take this video out of context. But as it relates to markets, let's take a peek at these two charts and look at what we've seen over the last 10 and even 40 years of events that has had the potential to really disrupt markets. Now, this first one, what we see is many different events over the last 10 years. So from 2009 to 2019, this chart tracks the S&P 500. Now, as we can see, all right, we have an upward trend. All right, it has been a bull market the last really 11 years. All right, but all of these things that have happened over the last 10 years could have been situations, all right, that some would say that is going to send the market down, okay, for a trend. All right, so let's just highlight some of these. We go back to 2011. We recall the S&P downgraded the U.S. debt to an AA plus rating. All right, what about Hurricane Sandy right here? All right, that was a huge hurricane that really, hurt New Jersey and the East Coast, and that was a big situation. Well, we're here in Michigan. We obviously remember the Detroit bankruptcy. Okay, that was a big deal. Now, to bring it, without getting too political, what about the election of Donald Trump? All right. Now, depending on what side you sit, you could have said that, hey, if Donald Trump, wins the election, the market's going to crash. Well, I'm sure there was people on the right that were saying if Hillary Clinton was elected, the market was going to crash. Obviously, over the last 4 years, we've seen that hasn't happened. And then lastly, more recently, we've seen the inverted yield curve. Okay. So those are just some events. Obviously, you can see here that these are all big headline news. And as we can see, the last 10 years, the trend has been up. Okay. Now, let's look at one more. And this is actually specific to epidemics in the stock market. Again, this is tracking the S&P 500. And as you can see on the chart, okay, since 1980, we can see there's been recessions. Okay, obviously, recessions and bear markets. We can see the downtrend here, the downtrend there. All right. But overall, what we see from 1980 is that. Okay. Now, a lot of us will recall SARS in 2003, H1N1 in 2009, and more recently, Zika. Okay. Now, I think the important part of this chart is looking at what the S&P 500 did during that time. Okay, so we can look from a 6-month percent change and a 12-month. All right, now you can see the averages there during those epidemics. So please don't take this as we know what's going to happen in the future. We don't. Clearly, this last week has been difficult. All right, as we, the news, no matter what you're watching, is talking about, how the markets have been impacted, but also, the scare of, what this epidemic could bring. So obviously, we don't know what's going to happen in the future, but what we want to do and what we talk to our clients about is remembering the fundamentals of the economy. Okay. And that's one thing that we talk to our clients, and we still feel that those bones of the economy, when we look at the GDP, when we look at profits in corporations, clearly we're being affected this last week, but we still feel that that is strong for 2020. Okay, so I hope this video was helpful. If you guys have questions for us, obviously about your accounts, please reach out to us. That's what we're here for. If you're watching this video and you have an advisor, talk to your advisor specific to your account, because a lot of times what we see is the Dow Jones or the S&P go down, and we correlate those losses directly to what our accounts are doing. So contact your advisor, see what's going on, and talk to them, because it's important that you are comfortable with where you are invested and where you're allocated. Thanks for watching. I hope this was helpful to you. Again, if you want some of these charts, reach out to us, but I hope that was helpful. Thanks a lot.